All right. Hello, everyone. Thanks for joining us. Hope you guys are all doing great. My name is Lucas Outomuro. I'm head of research at IntoTheBlock, and today we'll be covering everything you need to know about analytics, crypto analytics. So we'll dive into on-chain analytics, DeFi, price predictions, NFTs, and some Ethereum analytics there as well near the end. We do have the Q&A at the end, and we'll be live streaming it through YouTube and the metaverse. So feel free to share it if you guys are enjoying. Without further ado, let's get started. So IntoTheBlock is a analytics product where we vision to cover pretty much every single data point relevant for a crypto asset. We started with on-chain analytics. So we plug into the nodes of over 14 blockchains, extracting data from the public permissionless blockchains and turning it into real life actionable insights that indicators that users can use to evaluate crypto analytics, as an investment standpoint, also as a research to understand the value behind these networks at play. So we cover over 1,000 crypto assets. So as I mentioned, 14 main blockchains, and of course the assets built on top of those blockchains. So we have a lot of ERC20 assets. We also have our sections of insights where we dive into the decentralized finance ecosystem, also known as DeFi. NFTs is our new release, diving into analytics, showing the growth in this category, as well as capital markets, comparing crypto and its role within the broader market, traditional markets ecosystem. So feel free to follow along. I already have an account, as you guys can see. Some of these metrics, all of these are available through the free trial. Some you don't even need the free trial. So I'll start with DeFi indicators, which you can access simply by clicking IntoTheBlock's website. So I'm assuming many of you are already familiar with DeFi, but just to make sure we're all on the same page. DeFi is a term for an umbrella term for a series of crypto applications built on top of Ethereum, Solana, Avalanche, multiple layer 1 platforms, and they enable financial services and use cases in a way that there's no central party, automating away a lot of the logic. So some of the largest use cases here are lending protocols, as well as decentralized exchanges. These are some of the most popular ones. And so here we can see the market cap of DeFi tokens and how that's split over time. So you can be able to track how it's split between protocols, also how it's doing relative to Ethereum. So for now, for our initial version of this launch, it's just for Ethereum protocols, since they have the largest share and the largest DeFi ecosystem thus far. So we can see here a relevant metric, how these tokens are comparing versus Ethereum versus ETH. So the past month, even though the market's been on a downtrend, you can see here a slight uptrend from under 20% to slightly over 20% that DeFi tokens have been making relative to Ethereum. So that's a good ratio to keep into account. And then, of course, you have one of the most tracked metrics in the space, which is the total value locked. And what that means is a fancy term for the total amount deposited into DeFi. There are some nuances, as in, I won't go into full depth, but for instance, the amount borrowed is subtracted from this amount from lending protocols, since it's no longer deposited in the protocol, it's leaving it. So it does understate it a bit, but we track here the total value locked. We see here it reached a high in late April of 250 billion, nearly. And then, of course, as the market came crashing the past few weeks and there's been uncertainty, as the whole ecosystem, DeFi has seen some outflows. We also cover this by protocol, so you can see how they're standing versus each other, head to head. So we can see here, for instance, Maker and Aave, two of the largest lending protocols, so far it seems like they have undergone similar impact from the recent downturn. We can see also the supply of Ethereum and Bitcoin that's deposited into DeFi. We'd like to show this as a percentage of circulating supply. You can also get an idea of like how scarce it makes this asset. In case of Ether, we don't account for staking, so it's actually even higher if you include that. And the dollar amount, of course, does drop along with prices. But we see here the trend has been relatively downwards in May as the market started crashing. We saw some outflows, but it has since began to recover. For Bitcoin, it has been surprisingly steady since the recent downturn around May 10th. So that's been holding relatively well, around 1% of Bitcoin locked into DeFi. Then I'd like to show some of our network metrics that are very relevant if you're a DeFi user. So we cover, for instance, the amount of active addresses for all these DeFi tokens and the number of holders. But one that's my favorite, and we typically share this with a lot of our audience, is the gas cost heat map. So if you're looking to use DeFi, or for that matter, really any application on Ethereum, you know that it can be expensive. Especially last year, we saw some days where it would cost over $100 to make transactions on Ethereum. And of course, if possible, you would like to avoid that. So we have this metric making a heat map for it. So I'd like to look at it in the 28-day, so the past 4 weeks. And you can see the average gas costs hour per hour and day over day. So typically on the weekends, it's when it's lowest, as you can see here from the green, that it's relatively cheap to make transactions those days. While instead during the week, it seems like Monday and Thursday afternoons are the busiest days over the past 28 days and the most expensive. So therefore, if you do want to make transactions in DeFi, it's helpful to be wary of this, and that way you can schedule what's the ideal time. Of course, this is just an average based on historical data, and it may not reflect exactly week after week. But the weekends part and the evenings part, so this is UTC times, but typically after 12 a.m. UTC, it also starts dropping. So these are very interesting patterns that can help you as a DeFi user and to get most out of it. We also see the Ethereum fees over time. This is hour by hour. I believe this was the Bored Apes land sale. So typically spikes here have to do with either severe market volatility, like was the case here, or with with NFT drops, like this was crazy, $58 million in ETH fees within just 1 hour that day. And we see this in terms of gas as well over time, similar picture. I won't cover it all, of course, but another one of the metrics that I really like to see is the top trading pools and the most liquid ones. So this is very helpful if you're looking to trade in decentralized exchanges or provide liquidity to them. So you can monitor here what are the most liquid pools, the largest, the return on liquidity. This is based only on fees. So the actual returns after trading revenue, after token emissions, are actually larger. But you can see here the USDC ETH pool, for instance, has been doing really well with 27% nearly in returns. And here you can see in the top traded pools, these are sorted by trading volume. So you can get an idea of what tokens are trending. So for instance, we have like a leaderboard in a way. So we see Matic Sand, surprisingly today, I think this is Sandbox, increased over the last 24 hours, 8 spots, and Staked ETH decreased a bit. Then some of the metrics that we look at most closely at IntoTheBlock have to do with the liquidity positions within each pool. So if you're a liquidity provider, if you want to generate some yield on your assets, this is one of the few opportunities that DeFi enables. That, for instance, in traditional finance, it's complex to become a market maker. These protocols such as Curve automate this away for users. However, there are some risks, so it's important to keep these into account, and that's what we aim to do. All of these indicators are free to use, by the way. And for instance, if you want to do your own analyses, you guys can download them and check out the data and do your own analysis. I'm looking here at the STETH pool, for instance. So for those of you that are not familiar, STETH is a Lido liquid staking ETH. So it's a token that generates proof of stake rewards for you automatically, and it saves you the issues of locking your liquidity until the merge, whenever that happens, and it also means that you can supply less than 32 ETH into this asset. Over the last few weeks, this pool saw some very large outflows. This was the case as panic from the Terra collapse led to stablecoins and assets that were pegged to each other to depeg. So STETH had been 1-to-1 to ETH for a long time, and as the Terra collapse happened, USDT depegged briefly, and staked ETH for a longer amount of time has held below, and so that led to a lot of liquidity outflows from traders that don't want to go through that impermanent loss. We see the spikes in volumes. These are helpful, of course, if you're a trader. That's good. If you're a liquidity provider, that's good for you. The percentage of the liquidity that's being utilized, and one that's very useful is the amount of the distribution of that liquidity. So as STETH became depegged, the pool became primarily STETH. And what that means is that if you were a liquidity provider and you started here when it was 50-50, you ended up with more staked ETH than ETH. And so that's one of the main risks with it. So if you're a depositor, then now suddenly you have 70% staked ETH, 30% ETH. And that's something that's worth considering, like if you're comfortable holding that, and also making sure that that's happened. It's good to know in advance before there's further depegging. And we also see the prices of these assets, the liquidities inflows, the transactions breakdowns in the pool, and we have more indicators and more DeFi protocols that we cover. I think that's enough for DeFi, but for now. But feel free to check these out. We cover a bunch of DeFi protocols, and we're continuously adding more. So if you're interested in the DeFi space, make sure to check these out. Now I want to move into NFTs, and non-fungible tokens have been, of course, one of the largest success stories for crypto in 2021. Their volume has been just insanely fast growth. Even in Q1 of 2022, we see the volumes accelerate. So this is insane graphic. You can see how pretty much you can see no volume or relatively low volume, still 150 million cumulative that's been traded by NFTs. And then in 2021, the growth accelerated and accelerated. And then Q1, we see that final, parabolic rise, and then the volume growth has slowed down a bit. So that's, a symptom of the broader market conditions. And one that's pretty cool is that we show the NFT sales, top NFT sales over time. So you can see here the largest sale in the past 24 hours was this Bored Ape Yacht Club NFT that sold. And over the last 30 days, the largest was this one that sold for over $1 million for just this NFT picture, which of course gives you more access to their Bored Apes community. But yeah, we track also the number of collections, which unsurprisingly has been growing along with volume. One that's very relevant, we see NFTs popping all over the mainstream media, especially past few months, but still as a percentage is a relatively small amount of addresses that hold NFTs. So if we put this into perspective, it's gone from just over 1% to 5% of addresses holding NFTs, Ethereum addresses, that is. But yeah, we just recently passed that 5% metric. But even though that's 3.8 million addresses, it's still relatively low in comparison, not just to the percentage that it makes, but relative to the noise and awareness of the industry. It's worth keeping these numbers into account. We also track these metrics by collections. So we have the market cap, taking the average price of these assets times the number of supply. You can see how concentrated the supply is. So for instance, both Bored Apes and CryptoPunks, there are 10,000 pieces of each, but there are a lot more owners for Bored Apes, which arguably means like it's more distributed amongst the community. While CryptoPunks, there's 3,000 owners, which means on average, each of these addresses holds 3 CryptoPunks, slightly over that. We can see the volume, how they've traded, their average price, and we can track these over time to see how they've varied. So as we can see here, for instance, over the past 30 days, along with the broader market conditions, most NFT collections have been going on a downturn. Bored Apes only down 1%, but CryptoPunks down 33%. Moonbirds down 3%. This is one of the largest last month or so. It's still holding relatively well. And then we see for some collections like CryptoKitties apparently booming 4,900%. We can see here the top trending collections over time. These are actually not over time, these are over the past 24 hours. And one metric that's very interesting if you're looking to start trading NFTs is which ones are performing well. So you can see here, OK Bears Yacht Club did a crazy 10x in a week, and it's still one of the best performing in terms of price, average price, that is. And you can see also finally over time the most traded collections. So Bored Apes is quickly catching up to CryptoPunks, but CryptoPunks still remains the number one. I think that's good for the NFT section. Then I want to emphasize this section, which of course is very relevant in this day. So over the past few months, you guys have heard macro, capital markets, correlations together, Bitcoin's falling, Nasdaq is falling. That's the unfortunate reality that we have seen over the past few months. And we can attest that by comparing them directly, one-to-one. So we can see here, for instance, you can check whichever index or stock is most relevant to you. I'm putting here, just as an example, S&P 500 and the Nasdaq. So even though last year, of course, crypto outperformed, this year, as the market volatility has exacerbated, we see that crypto, Bitcoin, and ETH have been relatively underperforming. And the biggest picture we've seen is, correlations between the two really getting very strong and staying there. So we reached, I believe, a record high correlations in April, and it's sustained near there. So that means essentially crypto is following traditional markets. There are many reasons behind it. One is that traditional investors started investing into crypto, and as liquidity in the overall system decreases due to interest rate hikes and quantitative tightening beginning, both have become more related to each other, and specifically to the Nasdaq. So it's being priced crypto more closely to a high-tech, high-growth tech stock. And so we see here the high correlations and an inverse correlation versus the dollar index. We can see the Sharpe ratio and Sortino ratio, which is relevant because it puts into context the performance relative to volatility. Used to be that Bitcoin and ETH were above traditional indices, but again, with a broader downturn, actually in the 1 year, it's still a bit better than Nasdaq. So in terms of the volatility, we would have had better returns for holding Bitcoin and ETH than the Nasdaq, which is still relatively outstanding, even though it's down, but relative to their volatility, it's doing better. We can see versus stocks. So we have crypto-related stocks like Coinbase, which has, as you guys can see, has been underperforming relative to Bitcoin and ETH. To that matter, most crypto stocks, have been underperforming Bitcoin and ETH. So that shows a bit more the composition and the risk appetite in traditional markets has slowed down even further than within the crypto market. And also, I guess the potential that the investors see in it. These metrics are roughly the same, but just to show, we can track it versus tech companies, versus commodities. This is also free to use, and you guys can download data, so make sure to make the most out of it. And I want to dive into our core product, which are our analytics. So I want to use Ethereum as an example. Not, as you guys may know, not every crypto asset is the same. And so the key metrics relevant for each asset depends on their nature. So for Ethereum, being, the infrastructure for applications to be built on top, the most relevant networks are arguably the network. So make sure, tracking the growth, if there's active addresses using it, those metrics. We have this quick view that you guys might have seen. It's actually on CoinMarketCap's website, as well as in our other partner sites, hundreds of partners. So this is like a very quick summary of the current state of a metric. Right now, it's seeming that large transactions are growing in Ethereum, but it's being contrasted by bearish momentum in futures markets and less people being in the money. So it's a neutral for now. So this is one of our most renowned metrics, which is the in and out of the money. So we borrow from options terminology, showing the addresses that are in the money or making money on their positions on paper, as well as those that are making out of the money. One that's very interesting and very helpful actually is the concentration. So the in and out of the money around price. So we see here that around a price of 2,050 to 2,100, there's a very large chunk of ETH, so 7.6 million ETH that was purchased in that level. And what that acts, and we've been back testing this throughout time, and time and time again, we see that in those very large clusters of addresses and volume, there tends to be, in this case, resistance. If it's on the in and out of in the money side of the things, it tends to be support. So prices do tend to go towards those levels. So right now with ETH at a price of 1,800, if it starts heading higher, it's possible that it'll go face resistance towards this level. And since there are so many addresses that have previously bought at that level, they might be looking to break even there. So there's like this is the data behind the psychology of the market, showing that, and we can track this over time. I won't go into all of the metrics, but you can see like the number of large transactions is another very popular indicator, showing the number of transactions over 100,000 and the volume in them. So of course in 2021 it grew remarkably, but it's since slowed down. And as I mentioned, you guys can download the data. One of the indicators that I like to do with downloading the data is, for instance, showing the percentage the large transactions make out of the total number of transactions to get an estimate of the percentage of activity that comes from whales. And in terms of ETH2, we have very interesting metrics. So we have the amount of ETH that's being burned and the percentage that is burned over time. The issuance, this is one that we've been tracking very closely. So as you guys may know, in summer of 2021, Ethereum implemented EAP 1559. I'm zooming out so you guys can see the weekly average and like don't see the outliers as much. But you can see here the net issuance of ETH has been decreasing. And what does that mean? It means that it's becoming more deflationary. It's not fully deflationary yet, but following the merge, this should reduce substantially. So 90% decrease in issuance, which would make ETH very likely deflationary. And then, of course, as I mentioned, since it's the backbone of a lot of applications, the fees are very relevant. So the network indicators in general, we can see here the amount of ETH and amount of in USD that is spent over time. So we see the uptrend and how, especially like in comparison to the 2018 bubble, this was mostly speculation, and now there's actual organic demand and network growth. Of course, it's slowed down a bit over the last few months, as tends to happen in crypto, but you can get a better feel for it. You can also see the amount of ETH being staked, for instance, the amount of active addresses, which has been holding, relatively high, around just under 1 million daily active addresses, the amount of holders. And then these are very helpful, the network indicators, if you're like a long-term investor and you want to understand if people are using these networks and that type of metric. And if you're a more short-term investor, I would recommend taking a look at our ownership metrics. Of course, none of this is financial advice, but you can see here like who's buying, who's selling, get a better indication for that. So we can see here that large holders have been seeing net inflows over the past few weeks. So that's a positive sign. People are accumulating. And we actually go even deeper into detail. We can see this by the addresses holding. So we can see, let's check out what's the group holding the most ETH right now is the group between 10K and 100K ETH, and we can see what's going on with their balances. So you can select these. And let's check it out. It seems like it's been holding relatively steady. So here in March, the balance of the group between 10,000 and 100,000 ETH did increase strongly, but has decreased slightly, so negative, less than 1% though. So it's been holding. But one of the things that you like to see, is continued growth from large holders showing conviction in these addresses. And also seeing the composition of these addresses so over time. So we've seen the amount of long-term investors in Ethereum and in Bitcoin as well grow over time. So there's over 60 million ETH, so that's about half of the circulating supply is currently being held by addresses that are long-term investors, what we classify as hodlers, holding over a year. So that's a good sign for long-term conviction. We look into miner inflows. Derivatives metrics are also very helpful. Exchanges metrics, you can see inflows and outflows from exchanges. But yeah, in conclusion, we look at crypto from multiple standpoints, whether you're a long-term investor, researcher, trader, if you just want to get a better understanding for the industry, you want to look at DeFi, NFTs, capital markets. We've got you covered at IntoTheBlock. The product, we have the lowest. We want to make this as accessible as possible. So out of analytics products, we have the lowest subscription price. It's only $10 a month or $100 a year. For these indicators, you can download the data, do your own analyses. Over 1,000 assets that are supported, and we also have the free sections that I was just covering. That even if you don't want to subscribe, you can check out and share in social media, make the most out of it. So I think I've covered many things all at once. I know it might be a bit overwhelming for some of you out there. So I do have a few minutes for questions. Thank you guys very much. I hope you guys are enjoying the conference. And so I'll stick around for the Q&A for a bit. All right, I'll give you guys a few more minutes in case any other questions pop up. Okay, I'm here in the YouTube page. I see some questions. Here's a question: do you accept a certain number, or is it open to everyone? So in terms of IntoTheBlock, it's open for anyone. There are some metrics that are premium, but some that are free. Cesar is asking, do you have tutorial in your website? We do have a video and we have a resources page. So in our YouTube page, we have like tutorials, indicator. If you prefer video form, we also have in our website a resources tab that goes very in depth into how you can use each indicator. And so I would highly recommend that. We have a question: how can I buy Ethereum? Do your own research. You can't buy Ethereum or any crypto for that matter through IntoTheBlock. Try Cryptos is asking, do you have a free trial period? Yes, we do have a free trial period. It's 7 days, no credit card required. So, you know, no strings attached. If you don't like it, it's okay. Feel free to try it. And every feature is accessible during that free trial. So you can download data, you can look at all the metrics, make the most out of it. And yeah, I think that's it in terms of questions. Thanks everyone for joining us. Hope you guys all have a great day.